All right, we are live for the Thursday edition of the Morning Check-In. And as always, looking forward to connecting, sharing my 2 cents on what's happening, and just trying to make sense of all the craziness in the world. And especially when it comes to the monetary policy and the coming fiscal collision that will probably hit fully in 2025. So once again, not trying to spread doom and gloom, but just want to be realistic because the numbers don't add up. And the debt is so large that there has to be some type of day of reckoning. That's just, it's baked into the cake. The Federal Reserve know it. Our government know it. The average person who's been paying attention to what's happening in the news knows it. Based upon CPI, PPI, IMEI, all those acronyms for the current monetary debasement that we're witnessing, they're trending back up. And so to me, these are the early signs of what will be a second wave that will come through with unbelievable vengeance because of the amount of currency that has been created and the fact that every single Federal Reserve note needs to be accounted for, and it's going to reflect in the actual prices of goods and services, because you can create as many digits or as many units of paper as you want, but you can't create food, water, shelter, gold, silver at the same rate. So there will be a decoupling. And when it happens, it won't be easy to hide. So we're going to talk about that and a couple other things. But as always, before I jump any further, I want to welcome anybody, thoughts, ideas, suggestions in the comment section. Do my best to share my 2 cents on it as I can. But okay, so I got maybe 15 tabs open. A lot of them are from Twitter, where you take all the technical analysts and graphs and stats and charts and you put it together, and it really helps you see more truth than you'll ever find from the mainstream media. And that's what the whole goal is here. So as always, looking forward to connecting, man. If you guys have not, definitely subscribe, hit the check mark, hit the bell notification, whatever it is, so that you're notified when these videos are put out, so you can stay plugged in. And so the goal is always to make sure that you guys are plugged in with all the resources you need. So that's why in the description here, from a financial standpoint, it's everything a person would need to hunker down, protect, and preserve everything they work hard for. So definitely want to continue to remind people to do that. And as always, if you guys feel so, I want to be generous and support the channel, feel free to contribute via donations of any kind is accepted as well in the description. Links in the description. Feel free to do that. And as always, continue to subscribe. Make sure you guys stay plugged in with the channel so we can learn and navigate and encourage one another moving forward. So just a couple reminders here. And let's jump right in, man. Lots of interesting things unfolding. I want to try to stay on top of it as best as I can, just because we got a lot to talk about. And a lot of it has to do with what I consider legalized government monetary counterfeiting, and how because of the monetary expansion, our government, they're cranking up their debt load. And like I suspected a long time ago, the whole idea of creating that illusion of prosperity and wealth is by using the backdoor proxy of Bitcoin as a catalyst to divert attention off of the astronomical debt loads. And so I got some articles here to highlight how our government is in on pumping Bitcoins to create this wealth effect through Wall Street and the banks as a backdoor siphon, counterfeiting of currency that's currently underway and what's yet to come. There's going to be so much currency creation in the days ahead just to try to keep this thing somewhat stable, whatever that means. And therefore, Bitcoin will be the primary absorbent of all that, while gold and silver might get a little bit of a cool off. But the monetary forces and people who realize what's really at stake here will be utilizing these dips and corrections in gold and silver to get physical. It's one thing to be physical, and it's another thing to have illusions of wealth on a screen that are subject to ebbs and flows, that once again, if God forbid events happen, you're still looking at digits on the screen. You can't actually go on the screen and grab nothing digital in your hand other than turning those digits into real things or currency. And the currency, the Federal Reserve note, is the weapon that they're using for all this. Man, it's interesting. But anyway, okay, let me stop ranting. Okay, guys, okay, let's get into it. As always, for those who are plugged in, never know who might be new. I gotta always continue to remind people the resources. So on the screen here, you have an opportunity to be a part of something that I think will be very worth your time in the future. So right now, we're going to see more of an upward trajectory of stock markets and of course the bond market. But then again, at someday the music will stop. And when it stops, hopefully you have done enough as far as taking everything out that you don't want to completely see inflated away and put it into something tangible. And this is the opportunity to do it with colonialsmetalsgroup.com/RTD. So on the screen here, you can see there is a form here that you can fill out where you can grab this guide behind my head, which elaborates more on the importance of gold. So what this opportunity is, it's about being able to get a self-directed IRA where you can actually protect and preserve everything that you've worked hard for in a sound money fashion. And so if you're interested, information is right here, as well as opportunity to fill out this form here. Speak to the experts, speak to the professionals, get your questions answered, find out if this type of program is something that is good for you so that you can protect and preserve everything you worked hard for. So as you see the numbers on the screen, links right below this video here. Reach out to them, connect with them, let them know Mike sent you. You won't be upset. I'm confident in that. But once again, just something worthwhile for those who are interested. And then next, I want to continue to remind people, if you have not having a chance to get fractional 24 karat gold polymer notes as a way of protecting and preserving yourself in a very affordable way. So from right here at $5.12 for a 1 unit of 20 karat gold, 1/1000th of a weight distribution, all the way over here to what is it, 50, which is about 256 at this current moment. And these notes are actually physical in nature, they're heavy. And speaking of which, give me 1 second, I got a couple sitting around here. But point in case is, if you guys are interested in participating and grabbing a hold of something physical and real, true, modernized sound money, go to buygoldnotes.com, links in the description, and you won't be disappointed there either. In my personal opinion, this is all my opinion. I'd rather hold something that I can feel than look on the screen and hoping the number continues to go up. But anyway, okay, so keep it moving. There's also, for those who might be interested, Quicksilver. It's a great program that I would encourage people to take a look at if you're interested in getting involved in physical silver, where you can actually set up an automated distribution where you get allocated monthly to your house or wherever it is you want to send it in the form of real silver that you can actually start saving 1 ounce a month on auto shipment. So there's some people behind me here if it pops up, but these are some people who are part of the program here that have been basically able to protect and preserve themselves, their wealth. And so this is a program here if it pops up, but it may not. But anyway, point in case is, if you guys are interested, Quicksilver is the name of the program, and then the link to join and to find out more is mysilverteam.com. And of course, it's something I've been a part of for quite some time now. And once again, me not having to pay attention to the ebbs and flows of the market, it's just automatically shipped to me to where it is what it is. So I don't have to worry about anything. So if you guys want to do the same thing, feel free to find out more as I get my screen situated here. Give me a second here, and we'll keep it moving right along. But I want to make sure everybody has a chance to get physical while they can. So yeah, we'll definitely love to work with you guys. Okay, let's keep it moving. Let's get into some price activity right now. So as of right now, let me refresh your screen so you see what I see. Go through some figures real quick, and then we'll move on. Silver. $30.47 as of right now. And when I shared it with the community earlier, we were down at $29.70. And so this was a heck of a way to start the day. But then again, you can't keep sound money down for long. And so it's back up. What's that about? That's about 70 cents worth of activity there within just literally hours. So lets us know that the forces that want to take this thing higher are still present, regardless of the dumping of paper. We got $2,500 gold, and it's down from what it was. It got up to almost $2,800 not long ago, until President Trump came in and basically gave a lot of interesting promises about what he plans on doing with the markets, so people can see where we've come from in the last month. So it got up to $2,788, and then now it's down to where you see it today. So once again, we know where the world will race to when things actually hit the fan. And right now, because of the euphoria and excitement about economic growth that this upcoming administration is talking about, he's doing a good job of selling and juicing the legacy markets, which is good to say that he's going to continue to do that, because it's my personal opinion that a lot of this upcoming presidency is built on illusion of growth, of economic prosperity, with all the euphoria that he's going to try to create. Making America great again will lead to people wanting to put currency here, because he's going to talk very favorably for the markets. And the way he's talking is all predicated on debt. This system can't grow without more debt. And that's what we're talking about today. I'm going to show you how the debt is the problem, but then again, the narrative of fighting it, or the debasement of our currency, is not working, because we're seeing an uptick of all the figures, which will be very problematic. Okay, so here we go. Let's get into some headlines real quick. So on the screen here, you can see just something that caught my attention. A lot of interesting graphs in here. So we're going to just dive real quick. I won't bore you long or read too much into it, but I just want to give you some interesting details here that I think will be very telling of what's happening now. So let me get it on the screen here. Okay, you guys, it says 2 firm inflation prints just made the Fed's 2025 rate cut path a lot murkier. So once again, because inflation because of prints were so outrageous for the last 2 years, the fact that we are now on the downward side of the CPI figures, still above the 2% mandate, the Federal Reserve did a good job of just jawboning this economic growth and soft landing narrative or whatever. And so literally they've let enough air out the bubble to where now the bubble in and of itself is becoming problematic, as we're witnessing all the issues around us now. The economy is officially slowed down. I got article after article of layoffs in droves. The manufacturing sector laying off in droves. Tech sectors. If you watch me now, I know where the companies are laying off. I know, because it's there. And so the labor market is softening up, and overall investor or consumer confidence is also trending down. And then, of course, all the surveys that talk about the CEOs, their gauges for the future, even they're concerned because they're trimming fat now, laying off and everything like that. So definitely there's issues. And then you factor in current borrowing costs are still relatively high given where they were 5 years ago. So they're stuck in a hard place. And so as we're witnessing now, the monetary easing has already started in a variety of forms from a global liquidity standpoint, to where we're witnessing a problem here, because as they're talking about cutting, the CPI figures, PPI figures, all the indicators that show that things are not as good as they wanted to make it seem are trending upward. So they're faced with the idea, do we cut into something that's still a problem, or do we pause, or do we backtrack? And the truth be told, they need to hike more. We need to have a Fed funds rate equal to or well above the real rate of inflation, not their bogus figures, but that'll never happen because the house of cards will come down on itself. But if we play along with their game, sure, we'll do that. They're going to end up triggering a systemic event, or the forces that be, will use the next 60 or so days before this next administration comes in, and they're going to pull the plug. This is just me off the top of my head thinking about how they could cover this up and kick off President Trump's presidency with an event that would lead to the government needing to respond in an emergency fashion to then create and cut rates and then juice the markets. So I can imagine in the next 60 days, there could be some type of unplugging of they just pull the rug from underneath this incoming president and give the markets a reason to surge higher, which will spur on more of what this economic growth policies that Trump is talking about. So just a little something there to float out there. Okay, got to get through this, but let's look at some figures real quick. Give me a second here and we'll make this worth our time. Let's just look at this chart here because this is where I want to get to. So just some figures here. I'm sure it says on Wednesday, the core CPI, which strips out the more volatile cost of foods and goods, showed price increase 3.3% for the third consecutive month during October. Okay, then today, core producer price index revealed prices increased by 3.1% in October, up from 2.8%. Anyway, we cut it. The very metrics that they use, which are already stripped of the most important things that we use, even they're trending up. So if you look at, there's analysts out there that post the real world weight rates of percentages of what we're experiencing, like hotels up 10%, transportation up 12%. Auto mechanic repair shops 9%, fast food. So all these percentages from the real stuff is closer to double digits, and they're playing around with 3, 4, 2. It's already an illusion. Okay, but it doesn't stop here. Keep it going. So those are just some figures here. So CPI, PPI, core. I'll give it to you from here. So looking on the screen here, right behind me, as you can see here, these are the figures that came out today. So here we have the PPI minus food, energy, and transportation. It was previously is 3.3, but 3.5 is what it is now. So that's up 0.2%. Then we go down to what else we got here? We got PPI month over month. It was 0.1 last month. Now it's 0.2. And PPI year over year was 1.9 last month, and expectations was 2. So yeah, we're trending upward, people. And let me just real quick look in here, zoom in here, and get an actual zoom in so you guys see what I see here. So this is what it looks like. So literally everything that they have done to this point is predicated on the anomaly that we had 2 years ago that was a result of the emergency measures put in place. And so they're gauging every activity they've done to this point against this big mountain up top. So this is the PPI going back to, let's see where it peaked at. It peaked here in April 13, 2022 at 11.5%. This was the peak of the 40-year anomaly that resulted in 5 or 6 trillion being created from initially Trump, and then Biden topped it off with the icing on the cake. And so literally everything we've heard from this point has been to bring this down, to fight this. We're fighting inflation. We're going to So they hiked interest rates right into all this, bringing it down. And it got down to, according to their figures, 0.2%. Let me see what that might be behind me so you guys can see it. So it got down to 2%. And so since literally last summer, July, it has incrementally been climbing somewhat back up. And so here we are today. And this is before all the craziness happened. And let me just go max out. So this is what we were at for the last, 12 years. This is all the zero interest rate policy stuff. So this is Trump's presidency. This is Obama's presidency here, where things were well below expectations. Things were good. We were booming because borrowing costs were so cheap. But now something a little different. So here we are now, and they're having some issues. So don't be surprised surprised whatsoever that we hear more of the nonsense. Okay, let me get back to here. So real quick here, just show you some visual aids here. These are just some things here that people I think should be aware of. So here we got on the screen, investors recalibrate interest rates bets following U.S. election. So as of right now, these are the bets. So this is the 50 bip that they dropped. There's a quarter, and then supposedly next quarter coming next month. We'll find out. But as of right now, we're at 4.75 Fed funds rate. And if they really wanted to nip this in the bud, which they can't, they would take this well beyond 6, take it to 7, 8, and that'll squash things a lot faster. But forecast, November 14th, they're saying it's going to be 3.8 as the Fed funds rate. And then some say by September of next year, it's going to, or December of next year, I'm sorry, it's going to be 2.97. These are the forecasts. But we know all these forecasts are barring any unforeseen events. And we know in this world of artificial monetary and fiscal policy, there's going to be an event. So this is just to keep people somewhat calm. Don't believe it. And then let me see the next one here. Inflation heads for the Fed's 2% target. This is what they want us to believe. So since 2018, when we were near zero interest rate policy, this is where everything was at. It was no problem. We can't seem to find 2% beneath our policy. So this is when he came out around the first stimulus or two. We need to overshoot our 2% target so that over time it'll average out at 2%. So they shot over it, all right. They shot over it well beyond it to the point where it got up to, as it says here, 9.3%. And then they've been jawboning it down. And this is the part that is hard to deny or fight. This is where we're at now. And so as of right now, you can say whatever you want to say. It says 3.6. From where it was here, which was deflationary. This is when they literally started QT all the way down to where they decided to make a little bit of an adjustment. And here we are now, bam. And it's going to go up, and that's a problem. So what do? They're about to begin printing in the form of using the fiscal balance sheet. What do I mean by that? Okay, let me grab a couple things here. One of the things here, let me grab it. Let me see if I can find it because I'm all out of order. But what I'm trying to get to is our government is about to start issuing a large amount of debt. So one of the things that is being used is Tether. So literally Tether and this stablecoin proxy gambling ring that has been allowed for this particular time has been to acquire treasuries. So here we have just a little something I grab here. Anyway, so this is from 𝗙𝗟𝗟𝗢𝗪. He says Tether watch. So all eyes are on Tether because Tether is out here juicing the crypto markets literally dollar for dollar. And Tether literally is out here buying treasuries, which is another way of supporting our government's debt habits. And Treasury's unaccountable entity, except the fact that the Federal Reserve and the Treasury clearly are using and working with them to be able to, we'll issue it, you buy it, you print it and turn it into stable coins, USD versions, and then from there, we have a third type of currency. We got the debt, we got the commercial bank ledger, digital representations, and now we got the stablecoin chain-based dollar representatives. And for Tether, they get security because they're working with the government. So more than likely, they'll be safe for whatever from auditing. And with these treasuries on their balance sheet, they then can create out of thin air digital dollar representations and then use them themselves to buy Bitcoin, to lend against, to support all these Web3 development things that people can come in and borrow. So they've literally turned the blockchain with stable coins and into a gambling ring that also is a money laundering operation that our government can use to literally provide to the markets without needing to take out extra debt or needing to do anything astronomical that's going to show up on their balance sheets. But they can let the Tether become the next lender or creator of first and last resort. But real quick here, it says, so this guy says I'm bored, so I might as well show you guys another printing cycle of how to print unbacked Tether without people noticing. Seems Tron, another blockchain, is going out of style, so might as well document history a bit. So real quick here, he just goes through some of the activity where you see some anomalies where you have just all of a sudden out the blue, Bitfinex, Tether, Treasury, they just create $250,000. And then on their side, they'll say that these will back up this $250,000 that we just created. So this is just one of many. And so he got documentation all the way through the wazoo, but I'm not about to go through all that. But my point is, here we have here, think a quarter trillion dollars annual printing rate is the highest I've ever seen. So he goes on to some interesting things here showing how incrementally Tether's balance sheet of liabilities, aka treasuries, equate to the amount of USDT dollars that are being brought into existence, and it all correlates with the Bitcoin price pump action now and everything else. So if this is true, that they're taking on government debt as a proxy to juice the markets, I would imagine this is going to go unhindered and it's going to go on for a lot longer than we all planned. So therefore, what will happen? The Bitcoin market cap is $3 3 trillion at this current moment here. And literally from this little 750 billion is all a result of post-President Trump election. So the markets, it says over 750 billion have been injected into the crypto market since Donald Trump won the election. And so this 750 billion is either fresh capital, foreign capital, or newly created money, government money laundered USDT that has helped juice this market. And then you think about globally. This is what's happening globally. So if we look at the M2, give me 1 second here so I can make sure you guys see what I see on the screen. So here we have the chart of M2, which is USD, yuan, euro, and the Japanese yen versus the Bitcoin price. So as you can see, the last 6 months, this is what has happened. So these little bars here are the actual amounts of currency created. And so let me go back just to year to date. So since the beginning of this year, then 87 trillion in existence. And so what they're doing is they're linking the price of Bitcoin's activity along with the global liquidity, because you have other nations that are also doing the funny business our government's doing. And a lot of this currency is making its way into assets such as this intentionally. The goal is to use Bitcoin as the global proxy for this hyper inflated stable coin issuance. And we haven't even got to our government outright needing to print or juice the markets because of some event that's coming. They're trying to hold off. So that's why I believe they're using stable coins to do it. And it's doing a good job because all of CNN, Fox News, MSNBC, all the financial news channels are talking about big trillion. Anyway, so 87 trillion. And then as of last September, 2 months ago, $91 trillion in global liquidity. So between all these nations here, that's how much currency has come into existence. And they're saying that look at how interesting, you create extra 4 or 5 trillion in debt and Bitcoin happens to go through the roof. And then so just to zoom out, this is what it looks like over the last 10 years. These yellow bars are the actual amounts of global liquidity being created. And just look how Bitcoin, which is the orange line, goes hand in hand. And so we haven't seen nothing yet, in my opinion. So these are just some things that I think is worth paying attention to, because you won't hear about this particular subject matter or this angle on any of the financial news stations because they can't talk about this stuff. They need to make sure consumer confidence is still remaining in financial markets. And now that Bitcoin and all the altcoins are a part of this market, they're going to use that sector to make sure they juice the world so that it diverts attention off the fact that they're losing purchasing power in real time. And that's where the part that bothers me most is that economic growth can't occur unless you have sound financial, monetary, social, political, spiritual practices in place. And so the idea that Trump is going to grow the economy back, he has not mentioned one thing about the dollar in reference to what it can purchase. He made a comment saying that he don't want the BRICS nations to try to go around the dollar or dump the dollar. He wants the dollar to remain strong in relation to the other nations being forced to use it. But he's not talking about the idea that a single dollar is of no value if it can't purchase you anything. And so you can't grow your way to prosperity with a currency that's failing. So until he addresses the currency by doing things that is in favor of providing the holders of the dollar more value in doing such, everything between now and then is just an illusion. So that's why I'm not jumping on the MAGA train, because you can't make America great again or ever if our currency isn't worth a dang thing. And I'll end with this because I'm getting fired up, man. I want people to not fall for the banana in the tailpipe, thinking that this time is going to be different. All you need is just this time is going to be different. Just trust me. Got your vote now. I got the Doge Project. We're going to cut government frivolous spending and we're going to make America great again. Okay, here's the problem. How can we be great if we only got 2 cents left of the remaining 100% of our currency going back to 19? Can somebody answer that for me? How can we be great again if our currency, the Federal Reserve note, which is a private contract between our government and a private central bank. But my point is, I bring this up because I'm going to continue to remind you guys that what we're witnessing and what we're going to witness, I mentioned this the other day, and man, boy, I got a lot of backlash. People didn't like the way I said it, but hey, I'd rather tell you the truth than lie to your face. So what we're witnessing and what we're going to witness, first and foremost, I'm going to put it on the screen here so you can see what I see. These little visual aids, I love them. So what we're going to see, in my opinion, in this MAGA wealth effect will be the promotion and the adoption of Bitcoin as a hedge or as a way to grow our way out of, $300+ trillion worth of debt that we owe. And so Bitcoin will be used heavily and encouraged by. So you're going to hear Trump and his team and everybody else, Kathy Loomis, Congress, they all going to talk more about Bitcoin than they will gold and silver. Our currency comes from the United States Mint. You will not hear the United States Mint or gold and silver come out of Trump's mouth, not once. But you will hear him talk about Bitcoin, guaranteed. And what does that do? It gives more lifeline to these things in this person's hand. Genius. It's genius. All right, good people. That's all she wrote, man. But the truth shall set you free. And when you know you've been lied to, you've been hustled, hopefully you don't take it lying down. But anyway, as always, man, if you guys enjoy this, leave a comment, share your thoughts, hit the thumbs up, subscribe, share, do everything you need to give people an alternative perspective. Don't just settle for the mainstream narrative or your preferred narrative according to the propaganda that you've bought and thinking that there's going to be a person that's going to really change the world. And if you haven't tested your dollar IQ quiz, go to rethinkingthedollar.com, scroll to the bottom, test your dollar IQ. So far, everybody who's taken it don't know basic monetary history, and it's not pretty. And that's why our country is the way that it is. That's why the world is the way it is. So take this, share it if you like. Go to rethinkingthedollar.com. And also, you can get this monetary cheat sheet, which will give you more history than you'll ever learn in school. Go to rethinkingthedollar.com. Click the link in the description, scroll to the bottom, download it. It's yours. A gift from me to you. What else I got here? Another thing is, if you want an outside-the-box contrarian viewpoint, consider the RTD crisis reports that are available at rethink.com. Links in the description. Some way to think outside the box, put you in a much different place than the majority of people. And then last, opportunity. Get your weight up, people. Join the silver team. And links in the description. But other than that's all she wrote. Don't want to bore you guys anymore. Have a blessed day. Be safe. Love, live, laugh, and learn. In the name of Jesus Christ. Shalom.